Micron, one of the hottest stocks in September, just ended a 12-session win streak where shares of the company rose 43% during the period. They are about to report their Q4 earnings. Here are a couple of game notes for you guys on what's driving all this growth and a couple of risks to look out for. First, it's important to note that analysts are still bullish on the stock despite the recent rally. For example, Wedbush Securities reiterated an outperform rating on the stock and raised its price target to 200 from 165. To understand why Micron, you need to understand their core products as well as their customers. Put simply, Micron designs and manufactures advanced memory chips, and they sell them to customers with deep pockets like Nvidia, Apple, and Broadcom. If you really want to get at the growth catalyst here, you need to understand their core product. That is dynamic random access memory, or DRAM. DRAM makes up 80% of their revenue, and then within that, there are two types of subproducts. There's traditional and high bandwidth memory. HBM is absolutely where the growth and money are at, as this is what is needed for AI and the next gen of computing. Over the last year, this has gone from basically nothing to almost 20% of Micron's overall revenue. This is something we are absolutely going to be looking out for when it comes to Micron's growth potential on the earnings report. Micron also manufactures in the US with factories in Idaho and plans to spend $100 billion on factories near Syracuse, New York. Just saying, if you're reading the tea leaves here, you have an American tech company manufacturing in America. In terms of the earnings, Wall Street is expecting $11.2 billion in revenue for the quarter, indicating 43% year-over-year growth, and they're also looking for $2.79 in earnings per share. For what it's worth, Micron has only missed earnings once in the last 2 years. The main risk for Micron is if their customers start to slow up on AI CapEx, as that is what's driving their revenue and the stock. We are following the money closely to make sure their customers are growing their revenue to afford increased capital expense. I hope this helps. Stay tuned for the Micron earnings debrief posted in a couple of days. Be good.